So in today's class we are going to talk about the Japanese candlestick, like the different types of candlestick that we have. Now, among everything I'm going to tell you, you just pay attention to 9 candlesticks. Now, all these candlesticks, they have their names. Okay, they all have their names. So, but these candlesticks are the ones that if you have experience, you just realize that there's nothing special about them. They just appear in different formats. Like the entire candlesticks I'm going to show you today are the ones that make up the chart, be it a bearish chart or a bullish chart. They are the ones that make up the entire chart. Okay, so we are also going to see how we can find some of them on a live chart. Okay, all right. So first of all, like this particular topic now, you have a huge role to play on your part. I'm only going to just describe this for you so that you personally, please go and make findings, go and make research, carry out extensive research on Japanese candlestick pattern. Go to YouTube, go to Google, everywhere you can. YouTube will show you different videos. You will see how this chart, because my own candlestick now, the one I'm going to show you now, it may appear a little bit different than yours, because I told you the market is not mathematics. It is not conditioned to appear in a particular way. That's why I told you experience will matter a lot in this space at the end of the day. Okay, experience will matter a lot in this space at the end of the day. So you are going to do your research if possible. Like I could remember those days I used to draw them. You can, if you just know how to learn the best way you can. So me physically, on my own part, I used to write them out, I draw them, try to have a mental picture of it. So this time around, you need to know the names of these candles and how they will appear. Okay, all right, so let's start. The first one we have is a bearish engulfing candlestick here. Sorry, a bullish engulfing candle. Now when we talk about engulfing, we are talking about, like, when we say something is has engulfed another thing, it means it has overshadowed it, it has covered it. Let's say this is a candlestick here, for example. This is a candlestick, right? A bearish candlestick, and then we now have a bullish candlestick that appeared by the side of it. This particular candle has completely overshadowed this small candle here. That's why we call it an engulfing candle. It totally engulfs it or covers it. Okay, so that is an engulfing candlestick. All right, so I'm going to show you all of these candles on the chart. Now, the fact that I say that is an engulfing candle, it's if you are seeing it in a strong uptrend, okay, it may not really work as a reversal pattern, because these candles are what are going to reverse the market. So let's say, for example, now you are seeing like this market like this. If you see a bullish engulfing candle at this particular level here and at this level, okay, it is going to reverse the market. It's going to take the market high. Okay, but if you are seeing a bullish candle engulfing in the middle like this, somewhere around here, it may not really work except if there is a previous level at this area. Okay, so I'm going to tell you about all the patterns. You go and do your findings. Go and Google, YouTube, everywhere. Japanese candlesticks type, all the patterns, everything. You are going to see them. So we have the engulfing candle first. After which I'm going to show you how they will work on the chart. Okay. So we have the hammer. This is a hammer candlestick. Just like the name implies, if you have seen a hammer, okay, a hammer is something that looks like this. Okay, that is a hammer. A hammer looks like that. So that is a Japanese candle. That is a hammer candlestick. So if you see this type of candlestick, it is called a hammer candlestick. This is the hammer. Okay, it may have a small rejection above called wick. It may have a little or no wick. So sometimes the hammer may appear like this. Okay, and have small something at the top like that, or a little bit longer. Okay, so this can also be called a hammer. Okay, so that's why I'll tell you that the market doesn't appear perfectly the way you will always see it. So sometimes it's going to appear like this. So you will not go and confuse yourself and say, my teacher taught me that a hammer, this is or you will not get confused that I showed you that this is a hammer candlestick. So if you see something above now, you will not be wondering this is not a hammer. No, it's also a hammer candlestick, please. Okay, so that is a hammer candlestick. Now this candlestick is known as a morning star candlestick. A morning star candlestick. This one, morning star. Okay, so the morning star will always appear on a downtrend. Okay, so the morning star candlestick like this, you are seeing a downtrend like this, and then you now see something little like this, and then let's say uptrend. Okay, this is a morning star candle. This is a morning star. Okay, have some tiny wick above, like a spinning top will appear in between. So this pattern, this candlestick is known as morning star. Please, it's always on a downtrend at the end of the trend. So morning star will always appear at the end of the trend like this, like this. Okay, then the reverse of it is called an evening star. That one will appear at the top like this. It's an uptrend. That will appear at the top. So let me see an evening star. So an evening star will look like this. Okay, okay, so an evening star will look like this, so you can see what I'm drawing clearly. All right, so an evening star will look like this. So you can see the morning star is the opposite of evening star, or the evening star is the opposite of morning star. Okay, the evening star will appear on a downtrend, the morning star will appear on an uptrend. Everything I'm going to show you will make sense if you do your personal findings. Please do your personal research. Study all over again, all over again. This is a professional course, please. Not something you just sleep over it. It takes a lot of continuous effort for you to recognize everything perfectly. All right. So there is a pattern. We call this the piercing pattern. Okay. We call this the piercing pattern. So just look at the appearance of the candles. This is the candle here. This is the pattern itself. These two candles, this is the pattern itself. So let's say you have a bearish candle, that is a red candle. So these terminologies I may be using it, don't get confused. Okay, then you now have a bullish candle that will appear by the side a little bit lower. So this is what we call the piercing pattern. You can see how it appeared. This is a bearish candle, this is a bullish candle. Okay, so you can see where it appears. It may have a small wick above, small wick or rejection like this. Okay, this is a bearish pattern. You can see that it's open lower than the previous candle. This is a piercing pattern, please. You can see the difference between the body of the candle and the wick. Okay, so this is a piercing pattern. Now we have a Marubozu candlestick. I think I've talked about this in our previous class. We have a Marubozu candlestick. This particular one is called Marubozu. Just this one candlestick is called Marubozu candlestick. A perfect candlestick, straight like this. No, without upper wick like this, long wick. But in some cases, you may see a Marubozu candlestick appearing like this. This one is also a Marubozu candlestick when you see a very tiny wick like this above. Okay, or you see another Marubozu, or you see a candlestick like this, then a small tiny wick like this below. Okay, it can also be referred to as a Marubozu candlestick, but a perfect Marubozu candlestick is like this, without upper or lower shadow. Okay, so all of this can be used. This is as a Marubozu candle, Marubozu candle, Marubozu candle, Marubozu, Marubozu. Okay, so that is what we refer to as a Marubozu candlestick. All right, we have the bullish harami. The bullish harami is a little bit the same with the piercing pattern, but If you look very well, you will spot the difference. This is the piercing pattern, I already explained it. Then this is the bullish harami. Okay, that is the bullish harami. These two candlesticks here is the harami itself. This is the piercing pattern. This is engulfing hammer. You can see it is already circled. Morning star. Okay, marubuzu, just one. Okay, so this is the bullish harami. We call it bullish harami, bullish because it is a reversal pattern that takes it up. Now look at how the candle will appear. A bullish harami candlestick. You will see a strong bearish candlestick like this, and then a type of candle that will look like an engulfing candle, but it's not an engulfing candle. I mean, this like as if the bearish candle engulfs it, right? And then you see, sometimes you will see wick, sometimes you will not see wick, like this. Okay, so this is a bullish harami. This candle is a bearish candle. This candle is a bullish candle. Okay, this is a bullish harami. You have to look at these candles very well. I'm going to say how you can figure out some of them on the live chart, and then on your own you will go through the chart and try to see if you can spot anyone, please. All right, we have the inverted hammer here. We have the inverted hammer, the opposite of hammer. Okay, you can see they both appear on a downtrend, but this one is upside down, right? This is the same thing with this, same thing here. Okay, this is the same thing, but this one here is upside down. This one is upside down. Why this one is up direct? Okay, so this is a hammer, while this is an inverted hammer, upside down. Okay, hammer candle, inverted hammer. Both of them are hammers. All right, both of them are hammer candlestick, but one is hammer because it is facing up. The other one is called inverted. Why? Because it is turned upside down. Okay, and then here we have what we call tweezer bottom. These two candles here, they are tweezer bottoms. Okay, you will see something like you see two candles appear side by side like this. These are tweezer bottom, and we also, the opposite of it is called tweezer top. I will see it in our next slide. This is a tweezer top. This is tweezer bottom, please, when it is facing up, and then this is tweezer top when it is facing down. Okay, so all these candles, you are going to see them on a live chart. Now, having explained all of those things, now let's look at each of the candlesticks one after the other again. This is going to be a little bit longer lesson. I don't know, but let's see how it goes. I'll try to say how I can. Like I said, you have a major role to play, please, in trying to figure all of these things out. So, in this scenario, this is a hammer, right? Now you see there's a lower wick here. Now if you remember the anatomy of a candlestick, I told you the candlestick will have the body. This is the body of the candle. Then the candle will have the shadow, upper shadow and lower shadow, right? If this is a bearish candlestick, it means that it opened below here and then goes, it opened above rather, it opened above and then dropped down. If it is a red candle, it is, remember, red candles are, if I let me in a not simple time, red candles are always going down. They are always going down. Green candles are always going up. Okay, they are always going up. So that is the reason why in a red candlestick you will see that the, hold on a minute please. Okay, so red candles are always going down, green candles are always going up. For a red candle to go down, that means it must have the opening price above, then it will now push down. For a green candle to go up, it must have the opening price below and then push upwards. Okay, all right. So the hammer will always have a long wick or shadow. All right, and then look at the inverted hammer also. So let's look at other uh, slide please. So you can see very well now, this is a real chart. You can see the hammer candlestick. This is a real, even though this is a screenshot, but it's a live market. Okay, unlike the other ones. So look at the hammer candlestick here. Look at it here. You can see it has, you can see the body of the candle and the shadow or the wick. This wick shows you that the sellers entered the market all the way down here. They got rejected at this particular level and then go up and then finally close here. Okay, now as I told you, the hammer candlestick will always appear in a downtrend, indicating that the market wants to go up. So if the market is going down like this, and you now see the hammer candlestick, it is telling you that the market wants to push up. You can see. So after the appearance of that hammer candlestick, you can see that the market goes up. Okay, and if you look at this slide very well, we have so many hammer candlesticks. Okay, we have so many hammer candlesticks. We can see this to be a hammer candlestick. Hammer, look at hammer. Okay, but you need to know when the market will make a U-turn, in the sense that now you can see this can be referred to as an inverted hammer candlestick. Please, this particular one, the red one, irrespective of the body or the size, like I told you, it is not always perfect. It's not going to appear perfect the way you want it. So the inverted hammer will appear on an uptrend. It will appear on an uptrend, indicating market wants to go down. The hammer will appear in a downtrend, indicating market wants to go up. So you can see the differences now. You can see that the difference is clear. And at the end of this day, this market goes up and then this market went down. Okay, so but if you see a hammer candlestick in the middle of the trend, it is a continuation of the trend, not a reversal, please. So that is where a lot of people get it wrong. You now see this particular hammer, now you say, the person who taught me said that hammer candlestick indicates uptrend. Okay, but this candle is a trend continuation, because you cannot call this a hammer. It is a hammer candlestick actually, but you cannot just refer to it as a hammer because of where it appeared. A perfect hammer will have to appear in a downtrend, indicating market wants to reverse. Okay, I came back to this other slide because I forgot to talk about a particular pattern here. We have the another one known as the three white soldiers. Look at three white soldiers. Look at them here. If you see a perfect candlestick like this in the market, it is called three white soldiers. Like if it is going up like this, if it's going up, you know. So if you see this type of candlestick, these are three white soldiers, especially if they are Marubuzu candlesticks. But like I told you, sometimes they may have small tiny wicks, like very, I'm just using my hand to draw, that's why the wicks are appearing too long, but the wicks are supposed to appear very small, like dots. Okay, as you can see in the original image. So we call this three white soldiers. Then that is for bullish candle, it is going up. As you can see here, it is green, right? All three candles are green. It's indicating that, it's telling you that market wants to push higher. Then the opposite of it is not shown here, it's not here, but I'll just tell you in case. But if we see it on other slides, then it's the opposite of it is the three black crows. Three black crows, black like normal black that you know. Then crow, CROWS, three black crows. Those are three white soldiers for the bullish uptrend, and for three black crows when it is a down trend like this. Let's say you already have this look at the three black crows will coming down like this. So these are three black crows. You can see it is the opposite of the three white crows. I mean three white soldiers. So if it is bullish, we call them three white soldiers. If it is bearish, we call them three black crows. Okay. All right. So you can see, we look at the three black crows here. Look at the three black crows. You can see already circled. Look at them there. Those are three black crows. Look at. That is the opposite of three white soldiers. All right. See three white soldiers. These are three white soldiers. Okay. These are three black crows. So if it is bullish, like I told you, it is three white soldiers. If it is bearish, it is three black crows. All right, let's see other examples of evening star and morning star. So you can see they are arranged side by side each other. Okay, so this is an evening star candlestick. This is a morning star candle. You can see they are opposite each other. So if you just have it in mind that most of these candlesticks, they are opposite themselves, because in the market we only have two people, buyers and sellers, and we only have bearish and bullish candlesticks. That is red, green and red. So whatever is happening with the green candles, it is the same thing that is happening with the red candles. Okay, it's just that they will have their own names. Okay, so if you can see this candle, the evening star is facing downward. Sorry, is facing upwards like this, while the morning star is facing downward. That means the evening star will always appear in an uptrend. Okay, while the morning star will always appear in a downtrend. So if you see a evening star in an uptrend, it indicates reversal. Morning star in a downtrend, it also indicates reversal. We are going to look at those charts. We are going to see them on a live chart, please. Then if you see this particular chart again, these are called the rising three methods, and these are called the falling three methods. Rising and falling. Now it is rising, but it is a bullish a bearish candlesticks you will see. Okay, but at the end of the rising three methods, that's why we call them rising three methods. If you see this particular bullish confirmation, it indicates market wants to shoot up. Okay, at the end of, if you are the falling, for the following three methods, after seeing this bullish candlestick that is going up, then you see this bearish candlestick that appears, shows market wants to drop down. Okay, so like I will tell you, there is no explanation that I will explain here. These are the best I can explain. Go and start watching some of these clips. Maybe you can just do your personal research. Use Google and YouTube, please. You can see other opinion of other people, how these candlesticks will always look different, so that in case you see them on a chart, you will not get confused, please. Okay, now there is another type of candlestick we call the doji candlesticks. So all these candlesticks, you can just write their names down and then go to maybe YouTube, just type doji candlestick. You will see different videos, so you can watch it and see how they are appearing. So this is a doji candlestick. All these candlesticks are doji, meaning neutral. Okay, it means there is no decision. It means indecision in the market. If you see a doji candlestick, it means at that particular time there is no buyer, there is no seller in the market. There are no buyers and sellers. It's a point of indecision. So there is no, let's say there is no agreement for pricing at that particular moment in time. So the doji candlestick will appear. Okay, so the doji candlestick may look like this. This is a dragonfly doji. Okay, so if you are seeing this dragonfly doji, it shows that the market open above like this and drop down. Okay, goes up again but couldn't exceed the where its opening price, and then it closed like this. So this is a dragonfly doji. For a gravestone doji, the market opened above and drop down like this. So the market open below and goes up, and then it drops down again, but it couldn't exceed the opening price. So this one is called the gravestone doji. This is a long-legged doji, a doji candlestick that appear like this. Okay, this is a long leg doji. It appears something like this. We call it long leg doji. Okay, it may appear longer sef, it depends on the volatility at that time in the market. Okay, so you can see other examples of different types of doji candlesticks in the market. Okay, you can see them. So this one is called the doji star. It's just perfect like square. This one is called 4 price doji. Why? Because the market just was there. It didn't move up, it didn't go down, it just appeared like that. Okay, there was no movement, but all of them are doji candlesticks. Now look at the previous one I just explained, long-legged doji. This is the dragonfly doji, I've already explained it, and this one is the gravestone doji, already explained. Please, doji candlestick can also appear like this. Okay, it can also appear like this. You can see this is a common doji. It usually appear, these are the same doji candlestick I showed you, but with little body in the candle. Look at the body of the candle. Okay, look at the body of the candle. So this one we just used to illustrate different doji candlestick. Look at it. So you can see the dragonfly, 4 price doji, gravestone doji, long-legged doji, and star, or the common doji. Okay, so all these types of doji, all you see them appearing like this in the marketplace. If you see something like this, this is known as a spinning top candlestick. Anything you see like this is a spinning top candlestick. You know, it is always bullish and bearish. If it appears a bullish green like this, it is spinning top. If it appears red like this, it is also spinning top. So this one is called the spinning top candle. So this is the spinning top candlestick, please. You can see the body of the candle. You can see the opening price and the closing price for the bearish spinning top, and the opening price and close price for the bullish spinning top candle. Okay, so the spinning top candle can also appear like this in the market. Okay, so this is a spinning top candle. If you see something like this, so let's see the bullish candlestick patterns of candle, meaning they are going to reverse the market. A bullish engulfing candle. Okay, if the market is going down or is moving like this, you see a bullish engulfing candle appear somewhere around here. You see a red candle and you see a strong candle. It's telling you that market wants to go up. So that's a bullish engulfing candle. And the hammer candlestick, I already told you, it will always appear in a downtrend also. Have it in mind that all bullish reversal candlesticks will appear in a downtrend, while for the bearish reversal it will appear in an uptrend. Okay, you are seeing this is a downtrend. Okay, if the market will go up from here like this to this area, you are expecting to see a bullish reversal candlestick here. All these candlesticks are reversal candlesticks, please. They are going to reverse the market at strong levels, but they will continue the market if they appear in between the trend. Okay, so that is a bullish engulfing. This is a hammer candlestick. This is a hammer bullish engulfing. I already explained what engulfing means. That's completely covered. This is a morning star. always appear in a downtrend. That's a morning star candle. It will appear in a downtrend. Okay, that's a morning star. So for an evening star, it will appear in an uptrend, indicating market wants to go down. For a morning star, it will appear in a downtrend, indicating market wants to go up. Then the three white soldiers, inverted hammer, piercing pattern, all these are bullish reversal candlestick patterns, please. Then tweezer top and tweezer bottom will also reverse the market. You can see now, look at this tweezer. This is a tweezer top bottom. You can see it's different from the one I drew. So I can tell you that you can see different patterns. It will appear in different format, but from the original image of it, you are supposed to know that this is a tweezer top. This is a perfect tweezer bottom, but the market will not always appear perfect like this. Okay, maybe you see something like a Marubuzu candle, and then you see a bullish candle, and then you see something like a tiny wick candle. This is also a tweezer bottom. Okay, so it must not necessarily appear like this. There are times when you will see a perfect image or a perfect candle. There are times you will see imperfect candles like this. So if you are waiting for the market to show you a candle that will appear like this, a perfect candle, you may not get. It may appear like this and you will not know that this is it. You will just be waiting. Okay, all right. Now this is a screenshot of a real market chart showing us bullish engulfing. Like I told you, the bullish engulfing, it will always appear in a downtrend. So you can see from here, this market was going down. Okay, this is a downtrend market. It's going down like this. All right, now on getting to this particular area, once the market gets to this area here, maybe from previous past history, this area is a very strong level, or it indicates the end of the downtrend. Now you now see a particular candle, this green candle, appear after seeing this small bearish candlestick. Now you can see that this particular candle is a very strong long candle. It is an engulfing candle. This is a bullish engulfing, and you can see that after that the market shoots up like this. Okay, now in this scenario there is also now this candle is a bullish candle, a strong candle. It engulfs this the previous bearish candle. Okay, but we cannot call this a bullish engulfing. Why? Because there is a strong resistance level here. So this area is seller's area, so the market should go down here. What you are expecting to look for in such an area like this is a bearish engulfing. Okay, so this candle is not a bullish engulfing candlestick. It is a trend continuation. Okay, it is a trend continuation. So that's why I told you that the bullish engulfing candle, hammer candlestick, morning star, and whatever it is, they must appear at the end of a downtrend. Okay, they must appear at the end of a downtrend. Now in this live chart again, you see a falling tree method. Look at it. Look at the falling tree method. That is the bearish candlesticks. This 1, 2, 3. Okay, and then you will now see a bullish. At the end of that candlestick, you see a bullish candlestick here, indicating the market wants to go higher. Okay, so that is the falling tree method. So you can see now that the falling tree method here have lower, they have rejections. You can see it has lower rejection. Look at it don't have rejection, but the one I showed you is a perfect falling tree method like this, no rejection. I told you this is a falling tree method, right? So this falling tree is the same thing with this one. There's no difference. The difference is the appearance of the wicks. The wicks now will not get you confused. You'll not be wondering, this is not what I was taught. It's not like that. Because in the market, the price is always reject. Okay? The price will reject. So it's not every time you see a perfect situation. So you just need to be assertive. You just need to be smart enough to determine what is happening. Alright. So further examples, this is a morning star candlestick. Okay. So this one is a morning star candlestick. We appear in a downtrend, please always remember. Then an evening star candlestick will appear in an uptrend. So this candlestick indicates market wants to go up, while this one indicates market wants to go down. Okay, so this is another example of morning star and evening star candlestick. Always have it in mind. The morning star will appear in a downtrend. You will see something that look like the morning star will look like you have a bearish, strong bearish candlestick. It may not reach that height. It may have wick, it may not have wick. Then you see something that look like a doji candle or a spinning top candle below. Okay, sometimes the candle may not have wick. This is also, let's see, this is also this is also an evening star candle. Let me draw another candle. You see something like this. This is also an evening star, please. Okay, this is also an evening star. So forget about, a morning star. Forget about the wicks. It may have wicks sometimes, it may not have wicks. Or remember what the wicks are. Or shadow. That is the line you are seeing. And I told you that before a shadow or a wick will appear, it means that markets must have reached that particular level and reject. Okay. So you see the appearance of a wick indicating price rejection. Indicating price rejection, please. Okay. All right. And we have different candlestick pattern. We have the bullish harami, bearish harami. We've talked about the bullish and the bearish harami. The bullish harami will is telling us that the market wants to go up. Look at the bullish harami. Market wants to go up. You can see that the candle appear below and like this. This is a bearish harami. Indicates market wants to go down. You can see the market, the bearish candle. Okay. Then this is an inverted hammer. There's also what we call a hanging man. I will show you a chart where you can see what a hanging man. That is another candlestick. It looks like a hammer. Now you have to spot the difference between a hammer and a hanging man, please. The hammer will appear in a downtrend, while the hanging man will appear in an uptrend. Okay, let me look for a space where I can draw. Alright, let me use this space. Okay. If the market is going down like this, and you see something like this. Now this is a hammer candlestick. This particular last candle is the hammer. This one is the hammer. Remember. Okay. So now let me draw a hanging man. The hanging man is a hammer candlestick, but this time around it appears upward in an uptrend. Okay. So the market is going up like this. I'm coming. Hold on. Alright. Okay, good. So you are seeing an uptrend like this. Coming. You are seeing an uptrend like this. Like this. And then you see something like this. This candle is called hanging man. It is a hammer that appears in an uptrend. It is different from the normal hammer that you know. The normal hammer will always appear in a downtrend. In a downtrend. This is the normal hammer. Okay, we appear in a downtrend. The market, when the market is going down. So this is a normal, this is a hammer candlestick. This is a hanging man. Okay, then for an inverted hammer, it will appear in a downtrend but opposite of hammer. Okay, so you have a downtrend like this, 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 and then you now have something like this. This particular candle is called an inverted hammer. So have it in mind, the hammer and the inverted hammer will appear in a downtrend but opposite each other. The hammer will look like a perfect hammer that is facing upward. The inverted hammer will turn upside down, down, and the wick will be above, and the wick of the wick of the inverted hammer will be above. The wick of the hammer will be below. It may have small wick above the body of the candle. Alright. So that is a hanging man. Then we have what we call the dark cloud. I've already talked about Marubuzu candlestick, a perfect candle without wick, or sometimes you may see small wicks above or below. So this is a Marubuzu candlestick, no wick. Sometimes you may see a small wick like this below. This is a bullish Marubuzu candle, a green Marubuzu candle, a bearish Marubuzu candle, or a red Marubuzu candle. So remember, we've already talked about tweezer bottom. It will appear in a downtrend place, indicating market wants to shoot up. And this is a tweezer top, appearing in an uptrend, indicating market wants to shoot down. Then we have what we call dark cloud cover. Okay, you can see how this candle appear halfway the body of the previous bullish candle. The dark cloud cover is the opposite of the harami, the bearish harami also, if I'm not mistaken. My head is getting hot. Alright. Above all, there are some important candlesticks that I want you to remember. Have it in mind. Those are the ones you are going to research about. Search for dragonfly doji, hammer, inverted hammer, gravestone doji, tweezer bottom, morning star, bullish engulfing, 3 white soldiers, bearish engulfing, 3 black crows, tweezer top, evening star. These candlesticks, please go and do research about them and always have it in mind, please. Okay, always have them in mind. Also, try to remember the morning star. I've already said that. 3 black crows. I've already said that. The dark cloud cover, inverted hammer, okay, bullish harami, evening star, rising star, like that. Alright, so now let's open a real chart and see how we can figure out some of these candlesticks. Okay, so let's try to spot some of these candlesticks. This is a line chart. You can switch it to the candles. Change it from 15 seconds. Let me change it to 1 minute candlestick. Okay, so let's see if we can spot some of the candles we have just talked about. Okay, let's see if we can spot some of them on a live chart. Let me see. Okay, just a minute. See if we can spot some of these candlesticks on a live chart. Okay, let's look at. Okay, now see, you can see this is a spinning top candle. So you can see this is a spinning top candle. Remember, That is a spinning top candle. Look at another spinning top candle just appeared. Okay, the one close to it, you can use it as an inverted hammer. That is an inverted hammer candlestick. This is a spinning top. This is a spinning top. This is also a spinning top candle. Okay, so let's make progress. Like I told you, all these candles make up the chart. Okay, make up the entire chart. So these candles are the ones that appear continuously, but with different body size, different patterns, and the rest. This is a hammer candlestick. You can see now. Remember, this is a morning star pattern. You can see this is a morning star. Okay, sorry, that's an evening star. An evening star will appear in an uptrend like this, indicating market wants to go down. This is a live market, want to go down. Okay, but a morning star will appear in a downtrend. Okay, on this low level here, this is a doji. This may be like a dragonfly doji. Okay, this is a red doji. This can also be referred to as a doji candlestick. This is also a doji candle. Okay, so these are tweezer bottom. Look at tweezers. These are tweezer bottom. You can see that you can see now that how it is appearing on the chart. That tweezer bottoms, tweezers. Okay, you can see the both of them. Tweezer is comprise both candlesticks. This tweezer here, you can see that is those are tweezer bottom. You can see this is a tweezer top. You can see that is a tweezer top followed by a hammer. Look at the hammer there. Okay, this is a doji. This is a spinning top, spinning top, spinning top, spinning top. This is also a morning star pattern. Evening star rather, appearing in an uptrend, telling you market wants to drop. You can see. You can see that's an evening star. Okay. This is a tweezer bottom. I see tweezers. Tweezer. Okay. Now this is you can see this is a evening star. Sorry, morning star appearing in a downtrend, indicating market wants to go up. Okay, so this is an morning star pattern. You can see. Let me look for a perfect engulfing candlestick in a downtrend. Now this is an engulfing candle. Let me show you. This is an engulfing candle. The green candle totally covers the previous red candlestick. So that is an engulfing candle in a downtrend, indicating market wants to go up, and you can see the market goes up. So this when we get to patterns, so we're going to in our next class, that'll be our next. We're going to talk about market charts and patterns. Here we'll talk about channels, double tops, double bottoms, bearish flags, bullish flags, all of those things. Ascending triangle, descending triangle, wedge. You can see this is a double bottom pattern, and then this bullish candlestick confirm the double bottom pattern with a strong body and engulfing candle. So you can see the market goes up. You can see. Okay. Okay, we have seen bullish engulfing. Let me see if I can get a bearish engulfing. Okay, this is an inverted hammer. It may look like a gravestone doji. This is a gravestone doji. You can take it as an inverted hammer. That is a bearish one. Inverted, sorry, a hammer candlestick rather. Okay, a hammer candlestick. So that is also a reversal candlestick. Okay, so that's an inverted hammer. So this is we can take this one to be a hammer also. So sometimes it may appear like a doji, but just know the level it appears. This is a hammer. This is a hammer candlestick. This one is a perfect hammer candlestick, better than that. You can see this. You can see doji candlesticks. You can see doji candlesticks. This is a look like this is a. The first one is a. This one is a dragonfly doji. This is a dragonfly doji. This is a perfect doji, a normal doji, right? Okay, look at another pattern here, an evening star. Okay, evening star. You can see these patterns. You can see at the end of this pattern, the market will always reverse. Look at it is going to reverse. Okay. Let me look for a okay, fine, perfect. Look at the bearish engulfing candle. This is a bearish engulfing. What I've been looking for. I'm trying to just cover up everything I've talked about. This is a bearish engulfing. The red candle completely overshadows or covers the previous green candlestick, and it appears in an uptrend, telling us the market wants to go down. As you can see, the market dropped at least for 2-3 candlesticks. Okay, so that's a bearish engulfing candle. Okay, I want to see if I can see a hanging man. So you can see these are also an inverted hammer candlestick, just like the previous one. This candle is an inverted hammer, but if we combine these two candles, we can look at it as a evening star pattern. You can see, can look at it like an evening star pattern. Okay, this candle can also is also a tweezer. These are tweezers. Okay, the two candlesticks. You can see these are perfect tweezer candlestick, like I told you. These are the tweezers. Tweezer top appearing in a downtrend, meaning market wants to shoot up. I see these are tweezers. Okay, you can see a perfect hammer. May look like a gravestone doji, but you can look at it to be a hammer candle. Look at a hammer, and then the market shoots up at least. But okay, we are still going to talk about market pattern, but you can look very well. There is a level here. The market is moving like this, and then you can draw this area also. You can see. So by the time we get to pattern, we see how the market is moving. Okay, so this market was very, very good at this time. Look at the another hammer candlestick here. The market reversed. Look at another hammer candle. Look at another hammer. Okay, we have seen hammers, tweezer tops. This one look like a hanging man. Yep, a hanging man appear in the uptrend. Okay, but let me see if I can see a perfect hanging man. In a perfect hanging man, the wick has to be below. It has to be inside. This is a hanging man. You can see this is a hanging man candlestick. Okay, it is a hammer that will appear in an uptrend like this. Okay, is a hanging man. Okay, having seen market moves like this, like this, like this, like this. Okay, and this particular candle now appear. You can see the market was going up like this, and then suddenly this hanging man appeared. Okay, so indicating market wants to reverse. Okay, this is another bullish engulfing candle. This is another bullish engulfing candle. The green candle totally overshadowed the previous candlestick. Okay, that is a bullish candle. That is, look at a harami. Okay, look at the dark cloud cover rather. You can see, if you go back to the previous chart that I showed you, you can see this particular candle here. It's a dark cloud cover. Okay, you can see, after which the market reversed. Now you can see what I told you, all the candles, they appear on the chart. The candles are the ones that will appear on the chart, nothing more. Those are the major candlesticks, they appear on the chart. And then is another tweezer. You can see another tweezers. Got tweezers. You can see got tweezers. So you should open the charts either using your MetaTrader 4 or this IQ platform. Okay, and try to spot some of these candlesticks after studying them. Please try to spot some of them on the live market chart and tell yourself, oh, this one is a hanging man, this one is a harami, dark cloud cover, bullish engulfing, bearish engulfing. Look at another hanging man here. Look at, this is a hanging man. Okay, that's a hanging man candle. That's a hanging man. So our class is up. We are like few minutes to 1 hour already. 3 minutes. So I always tell you, our class, I don't like it to exceed 1 hour. Okay, so please, like I told you, in this particular topic, I've introduced it to you already. You have key rules to play, and the key rules is, I've already told you what you'll be looking for. Okay, I've told you what you'll be looking for. So the only thing now is for you to go make further findings, educate yourself on this particular topic very, very well. Sleep on it, study it, if possible, draw them, write them down. Okay, if possible, write them down. Now, all these candlesticks, this is a 1 minute candle. They appear on one day, they appear on 2 days, they appear on 3 days, 1 month, 1 week charts, just like I've already told you about. I told you that each of these candles represent a particular time frame. Okay, it can represent 5 seconds, it can represent 1 second, it can represent 1 minute, it can represent 10 minutes, 15 minutes, it can represent 1 day, it can represent 1 week, it can represent 1 month. Okay, so at the end of a particular trading day, let's say this is a daily chart, the candle may close as a bullish and as a Marubozu candlestick. It may close as a Marubozu candlestick. At the end of the day, the candle may close as a spinning top candle. At the end of the day, the candle may close as a tweezer. Look at. tweezer bottom candle. Okay, at the end of the day, the candle may close as a doji candle for a daily chart, for monthly chart, for weekly chart. Irrespective of the time frame, the candle will close as any candlestick it pleases. Depends on the strength of buyers and sellers at that moment. Depends on the market sentiment, please. Depending on the market sentiment. Okay, I know you have a lot of questions to ask in this topic. So you can just kindly drop your questions, please, and I'll go through them before before we start our next class. So the last questions you ask, I've already done justice to them. Okay, I've already done justice to those questions. So in our next class, like I said, we are going to talk about patterns, market patterns. So for this particular topic, please, the ball is in your court. Do all your findings, and if there's anything you don't understand, don't hesitate to ask. Okay, all right, that will be all for today. That will be all for today. So just drop your questions, I'll attend to them, and I'll see you in our next class. All right, good night.